what I'm going to do is I'm going to record this both on OBS as well as Discord. So hopefully this works. But yeah, let's get started. I'll share my screen and we can go through liquidity sweeps. And hopefully we learn something today. Let's get started. Okay, can everyone see my screen? I would imagine so, yes. All right, perfect. What we'll do today is just go through some of the ideas that I have, or at least my learnings from how liquidity sweeps work. Feel free to stop in anytime or ask questions using the SPX chat or the Discord voice chat thread, whatever you want. But fundamentally, the way that I trade, it's really just based on liquidity. I think there's so many different ICT concepts. The one that I understand the best is liquidity. This is how I've been successful at trading. This is how I find those trades, especially swings that are, printing sometimes anywhere between 2 to 9 to 10x. Luckily got one that was like 10x on Friday to Monday, which was insane. Was not expecting that, but it is what it is. I'll clear my screen and then we can go through how I draw the levels and we can kind of talk about how these liquidity sweeps work. But fundamentally, the way that I trade, I just look at where there is equal lows, relative equal highs. And if price raids a specific level, what's the next likely move from that, right? As you can see here, we close above certain key levels after sweeping lows. And that to me was a good enough signal where once you get a 50% plus retracement on a candle, or you get an engulfing candle that closes above this level, then you're going to get the next zone, from here to the next zone, from here to the next zone, etc., right? And price typically respects this relatively well. The only thing that will change how price moves or behaves is obviously news, right? Or you might have certain macroeconomic events, or Trump might say some bullshit, who knows, right? But that's the only time that I've seen where price actually goes really fast in one direction or the other, but it still respects the zones that we mark off in our charts, right? And I'll show you how I mark these zones, but fundamentally, this is where we stand, when you go between price zones. So if you see a closure or rejection at this level, you're going to go down here. If you see a closure or rejection at this level, you're going to go down there, and so on and so forth. And so what I ended up doing on Friday, for example, quite simple. I ended up marking out where we were on the charts and looking at where the possible liquidity zones are, right? So I'll go to SPY and then we'll go through SPX right afterwards, and that'll make it dead simple of how to trade this setup. Okay, so on Friday, you might have seen me paste this or share this chart where I basically marked at the call zone. The reality is we never closed below this, so I knew we were not going to go down to 657, and we were sweeping 662, right? And there's really nothing above here from 664 until 666, and then from 666 to 670. So when I started seeing the closures happen above those two levels, I was like, look, I'm going to swing these 670 calls for the day after, which was from Friday to Monday. And those are the ones that ended up going 11x, right? And I didn't expect it to even open at 677. I was thinking it was going to open at 673 at most, because that's the next level I marked, but we ended up going a level above that, right? And so you can see here very cleanly, like price just goes from one level to the other. If it's rejecting on a level, it's going to go to the one below that. If it's closing above it, it's literally going to go to the next level above it. It honestly is that easy. Any questions before I show you how I mark this out or why this is relevant for when we're trading? No questions? All right, let's go through how I ended up marking this. Hopefully everyone can still hear me. I have no idea. Everyone can hear me, right? Just someone write yes or no in the chat so I know. All right, let's clean this chart up, and then I'll show you how I mark these. And then just follow along. Sometimes Discord cuts off when I don't have the push to talk enabled, so just bear with me for a second. But I'm going to remove all the different lines here and all the text that I wrote, and we're just going to do this from scratch. Oh, and some people ask me about indicators. I literally use nothing. The only thing I use really is volume, but that's just more to just better understand where volume might be. But it's not like it's not that useful or beneficial, to be honest. So let's go through like how we mark, or at least how I mark these levels, and then we can go from there. Oh, is my voice not working anymore? No, it is. I think you can hear me, right? Oh, is it working now? Sorry, I was pressing the wrong button. My bad. All right, so we'll go through like how I mark these levels. And by the way, I don't use any indicators for this. It doesn't really matter. I literally have the 3 that are normal that are turned on by default. So I'm looking at volume, barely. I'm looking at the EMA. I guess it's useful. I don't know. But we'll go through like how I mark these levels, and we'll just start from scratch and just pay attention to like how I do this on the screen. I'll try to talk about it as best as I can. But as I said, like it's hard to do that. Talk to speech on Discord at the same time as marking these charts. So just watch how I do it, and then you can take it for however works for you. So what I'm really looking for are relative equal lows and relative equal highs. So on the 4-hour here, you can also do it on the daily. 15 minutes doesn't really matter. Like the time frame kind of is irrelevant. But the way that I see this is like, where has price reacted from in the past, and is there any evidence for what the next level above or below that is, right? And if you're at all-time highs, that's really hard to do because it'll just keep squeezing. Everyone wants to short all-time highs, but the reality is like it just keeps squeezing indefinitely until the trend changes to the other side. So what I'll do is like I'll go through the charts historically and I'll mark different levels. If anyone has questions, let me know. But hopefully you can see it, and I'll recap like how I marked it in a second. But we'll go through some of the historical evidence that we have of these different levels first. Okay, so what I'm seeing here is like we're getting a reaction from the 619 area to 620. Then we have a reaction from this area at 636. We have a reaction here. We have somewhat relative equal highs, right? We definitely have a reaction here where price like traded or respected this zone relatively well for a couple sessions. And then you definitely have some kind of liquidity here, which is a nice high, but also a relative equal low on the other side. Then you have some reaction here. So you can see it's been rejected twice at least. And then that became support in the near future. Then you have a zone here, you have a zone here, and maybe you have a small zone here, right? And then we can also see that there is definitely other levels in between, but we can mark this up indefinitely all day, every day. What I want to show you like is how this changes, where at least my mindset is when I'm trading every day, right? Oh, and I want to add this one level here as well, because I think it's important to see like where price has respected somewhat, where it's relative equal lows here, and where it's been rated a bunch of times, sometimes even to the level below that and even below that before it ended up retracing up, right? So this is on the 4-hour. If you look at it on the daily, it's going to be the same story. So that's a daily chart. You can see like price has respected these zones, or at least these liquidity layers for the last, 4 or 5 months at this point in time. And you can mark these levels all day and every day, but I don't want to get too complicated. I just want to mark like the high level zones that I think are interesting enough for us to trade, right? The cool thing is if I go down to the 15 minutes now, which is what I used when I'm watching the charts, and sometimes the 5 minutes, I can see where there's going to be a reaction, right? So here's a good example from today. Like price ended up opening around this level, and then we ended up going below that. We never closed below this, or ended up even reaching 673, and then we ended up going higher. Or sorry, this on Friday, and we never ended up going higher than this. And then we ended up rejecting from this overnight, and then pre-market this morning it ended up opening up below that. We never went down here, so I didn't want to roll any puts into like 673 or 670 area because it was not necessary. We never ended up closing below this. And what happened? Price wicked this level of liquidity and then moved higher, right? What happened after this? I set calls and take the calls up from this, which was 665 or 686, 685, whatever, because we ended up closing above this, right? So that's just how price, at least in my experience, likes to be respected, and just goes from one layer of liquidity to the other, right? And all I did was find relative equal lows and relative equal highs, and in some cases, relative equal lows became support. In other cases, they became resistance, if you want to call it that. And then once it broke through, it ended up just going to the zone after that, right? Whether it's on the upside or the downside, doesn't really matter. As long as you know where the zones are, you can kind of trade that effectively. And so what I want to see happen tomorrow, right? We're going to open up somewhere around here, maybe down here. I don't know. But price will literally just go from one level to the other, right? So I'll draw out the different scenarios that might be possible. We might get something like this, right? And it like respects this level, raises liquidity under 678, and then goes back up. That's one option. Another option is we kind of go up here, raid this level, and then go back down to this level, raid this level, and then go back down to this level, raid this level, go back down to this level, right? That's another option. Another option here is like we open maybe down here for some reason, I don't know. And then what happens there is like we raid this level, go down here, maybe raid this level, go back up, and etc. Right? So this is how price typically moves. You'll just get raids on liquidity and sweeps on liquidity. And if you have a small account, I think the best thing you can do is just play the reversal, right? So when you see a sweep happening here, for example, let me just get rid of this. If you see a sweep happening here, for example, you know it's not closing below this for whatever reason, just play the reversal. With the reversal here would be to get calls on the next zone, which is going to be 682, right? So if you got calls at 678 for 682C, those were 100 to 200% moves pretty easily. And that only took, I don't know, from 11:30 to 2:30 maybe, or yeah, what is it, like 1:30? So within 2-3 hours, you're getting a 200% move. That's pretty insane, right? And I'm going to do this tomorrow. I'm going to just by the reversal. If it price sweeps above here for whatever reason and comes back down, I'm only taking puts, right? If we're closing above this level, I'm taking calls to get to the next level after that, right? That's the exact same thing I did on Friday. Price was not closing below this level. And I was like, why is that? It's because they had enough liquidity to raid to go higher. I only played the reversal on Friday, and I even rolled that to Monday, which was like a nice 10x return, right? So that's how I would do it. And that's how I've been trading for the last, 6 months at this point in time, right? And to show you different evidence, let's just go back to like a random day from maybe, I don't know, here. And let's just see like if price actually respected liquidity levels or not, right? So you have this clear rejection from the last few sessions where you're not really closing above this and you're always rejecting this higher level. And what happens? Price went down to this level and then it went below this as well because they didn't have enough liquidity or the price didn't want to stay above this for too long. So it ended up going down to this level, wicking this relative equal low or bottom, and then going back to the next zone. What happened after that? It went from this zone to the next zone, right? And like to me, this is the cleanest and the simplest way to trade. I don't want to use 30 indicators. I think liquidity is really all that matters. And this is how I trade on SPY at least. And typically SPY moves slower than SPX. And so I choose to roll a lot of contracts. I'll choose to you'd get them 1 or 2 days out for the next zone, right? So if I see a closure or a wick above this, right, or a closure above this level, I'm getting a call for the next day because I know it's going to hit more often than not. If you're seeing a rejection below this level, I'm going to get puts for the next day or maybe in the same day because I know it's going to go down to the next level, right? It literally is, at least to me, that simple, right? Any questions before I go to the SPX chart and show you how to do this the same way? And by the way, the liquidity zones work the same way on any ticker. It doesn't matter if it's gold, Bitcoin, Palantir, SPX, SPY, it could be anything. And the beauty of this whole system is you can find where there's layers of liquidity very quickly. And I'll show you the QQQ chart because I think it's the most interesting one because there's not a lot of support, quote unquote, at certain levels. Okay, QQQ chart to me is the most, I'm sure there's an algo for this, I just don't care. And generally, I'm just waiting for a 15-minute candle above or below. Yeah, it is literally just support and resistance like that. It's literally what it is. If you want to call it that, I don't care to call it that, to be honest. I don't care to call things support and resistance. I only look at them as liquidity. Some people call them buy side liquidity or sell side liquidity. That's one way to do it as well. They're not the same thing, obviously, but you can literally look at it as support and resistance if you want. For me, it just how does price react to this level? And that's it. I don't care if it's called support or resistance. And I'm trying to be as very simple as possible. I have a very low IQ just between the chat and us. And I just understand one thing really well, which is liquidity. That's literally it. Nothing else to me matters. I don't care what you call it. All right, QQQ, the most interesting chart to me. This is what I said since Friday, I think, or maybe even this morning. I pasted this in the chart, the chat. But QQQ between 620 to 617 has nothing in between. And so you saw this really nicely today when we started wicking into that 617 level, and same thing on Friday. The next level above this is literally at 622. Above this is even higher than that. I think it's at 626. Below 617, it's 615, and below that, it's literally like 600. So like you have a steep drop here. That's potentially what's happening, right? And so on Friday, what I ended up doing, I didn't share this in the chat, but like I was just trading this as an experiment to see if these levels get respected on other tickers, which they do. On Friday, as soon as we started at open, I literally put 600 P for what I ended up trading that day, and that was a banger trade. That was like a 400% move within like a span of 2 hours, right? Because I realized like there's no quote unquote support below this level until 600, and that's exactly what happened. And once you started closing below this or working below this, you ended up getting on the reversal, which is also what I played, but ended up rolling into Monday, which is also super profitable. 624 RNQ. Why don't I mark this? Is because maybe it's an existing level, but I don't care for it because it's only happened once. There's nothing here, at least to my knowledge, at 624. Maybe you can look at this as a top level, but like it just happened once until today, so I haven't marked it, right? And like I want to see at least 2 instances where a certain level has been respected. If it's only happened once, that's a coincidence or a fluke. If it's happened twice or multiple times, ideally, like there's more evidence that there's going to be some layer of liquidity there, right? So in this instance, it only happened once at 624, so I didn't mark it. I should probably mark it now because you got a second reaction to it. But yeah, until I saw that, I wouldn't have marked it anyways. So that's how it works. And you can do the same thing on Bitcoin, Palantir, and I'll show you an example for Bitcoin shortly. And Palantir, it literally works the same way. All right, Bitcoin chart. It's literally the same thing. You got a reaction from 107. By the way, that 107 I actually marked out from months ago, so this is not new. And then you end up sweeping 104. What happened after that? You end up closing below this. You end up closing below that. You're now at another quote-unquote level of support at 102. If that doesn't go through, it's 101, 606. And just watch the charts. If it reverses, it's going to go to 103 next. If it continues going up, it's going to go from 103 to 104, then 107, right? And I think that's the best way to trade is just mark these levels off on your chart and better understand, what is happening behind the scenes. Are you closing below a certain level? Go to the next level below that for puts. Are you closing above it? It's the one level higher than that, and etc. So that's how I've been able to find a lot of successful trades. I just look at where there's liquidity and what's happening behind the scenes. Any questions? Same thing on Palantir. Like I actually marked this weeks ago. It hasn't even been that long until since I marked this. And by the way, for the candles, I'm only looking at most a 15-minute candle above this. That's it. I don't care about 4 or 5 candles. I just want to see a one clean break on the 15-minute time frame above or below. And this is how I draw all my charts every single time. I just mark the levels. I understand where there's liquidity. It reacted from that. Swept the lows, reverse higher. Swept the highs, reverse lower. What's going to happen tomorrow? It's going to sweep the highs, go back lower, something like that, right? And like you can see evidence for all these levels from the charts. So there's a quote unquote strong support at 170. If you go back some time, there's some support at 164. This is from September 2025. So like, yeah, this at least for me, this shit works. And it's been very successful for me personally. And like you can use indicators, you can use divergences. That's great for some people. I don't understand them. They're too complicated for me, to be honest. I just want to see where prices reacted and if there's relative equal highs or relative equal lows and what the next zone is after that. It's, to me, that simple. And as I said, you can do this on any asset. Doesn't matter if it's Bitcoin, Palantir, SPY, SPX, QQQ, like doesn't matter. All right, let's look at SPX next. SPX is interesting to me in 2 ways. One is that it has a lot of different levels, frankly, and I'm looking at this on a daily chart as well. And then on the 15-minute, you can have a lot of different levels that are, I guess, like reactive, right? It's like, to me, I wouldn't change or I wouldn't start swinging puts until like this trend changes towards the downside and you're closing below 657 basically. At this point in time, I can swing puts all day and every day because I know the next layer of support is going to be around here at 6480 or whatever, right? And so we can do the same thing. I can literally just get rid of all the drawings here and we can just start marking out these opportunities, as I call them, or like just layers of liquidity. So you can look at it on daily. I like the 4 hour just because I think you can get a bit less data here. Or I don't know if my stream is paused or not, but I think it's still running. But we can just look at the 4 hours and the daily, just confirm trends. Like you had a strong reaction here, you had a strong reaction here. You got a strong reaction here, a relatively strong, right? And then you have some reactions here. There's some minor levels in between, don't get me wrong. Like you can mark them if you want. I just don't think it's useful in most cases. And then obviously you had strong reactions here, right? And so if I look at this both on a daily and the 4-hour chart, like I can clearly see if we didn't close above this level, you're going to go back down to this level. That's exactly what happened. If you're not closing above this, you're going to go down to this level. That's exactly what happened. What happened after this, we got a strong reaction and we started going to the next level higher than that, right? So by the end of the week, at least if the trend holds, I want to see a closure above 6,875 on SPX and maybe even like 680 or 685 on SPY. But to me, like this is the best way to trade. Just mark out where the layers of liquidity are, where the levels are that are you have historical evidence for, right? You have some evidence that this was the top. When you're projecting, going down to the zone below that, and then you're reversing course. Closing above this, you're going to the next zone. Closing below this, you're going to the next zone. In this case, this is actually a dramatic sell that covered 3 zones. And then you ended up reversing out of that over time, right? So at least for me, this is the simplest way to trade. And then I only trade the reversals at small accounts. I ended up taking this $500 challenge last 2 weeks ago or the week before that. Ended up 2xing that in about a week. And then I swung that 670C from Friday. I only took on my small account like 1 or 2 contracts. One I sold for 100%, and the other one I ended up just keeping just to see what would happen. And that was a banger, like 11x trade, which I was not expecting, to be honest, because I didn't think we would open up that high on SPY. But here we are. Any other questions that I can answer? Oh yeah, this is a good question around fakes. Let's go to the SPY chart because I think it's easier to see there. Okay, sometimes what happens, and this is where the 15-minute comes in handy, you can kind of see the moves, at least to me, I can see them a bit more simply. When I saw this happening and we weren't not closing below this, like to me, this was a fake out, that this was like almost a trap where you're getting a bunch of people to buy puts that are providing liquidity to the market because they're going to get stopped out. This was to me a clear sign of a fake out that you're going to go higher, right? And this is when I started setting up those call positions. I was like, look, we're not closing below this. We're not even wicking below this. We're not even closing below this, but we're especially not wicking below this. This to me has bottomed out in a certain way, and I'm just going to take the next call above that, which was 682C. I think I even posted on the chat. And so like if this layer is swept, which it was in a decent manner, then like I'm okay taking the calls. Sometimes what happens is something like this as well, where you go way too low, right? You stop out a bunch of people and you grab a lot of liquidity in between levels. In this case, what I look for is a confirmation to the upside or the reversal, right? In that case, I want to see like an aggressive candle coming out of that zone that engulfs the previous big candle, right? So in this case, you can kind of see it. You have this institutional impulse down, impulse down, impulse down. But this candle ended up closing higher and taking out that entire low, right? And that was good enough confirmation to me to start buying calls. And that's exactly what I did on Friday. So that's how I manage the fake out scenarios. I just want to see if the direction holds and if there's a strong impulse above that that previous low or the previous high, where I can start taking calls to the next zone, right? And same thing, like this is what I was saying on Friday. I want to, someone ping me when 670 goes in the money, which it ended up doing. Was because we got these strong impulses above and we ended up closing above the low of the day. We ended up closing above like this liquidity here, which is like a minor zone you can also mark out. And I was like, okay, the next zone after this is going to be 670. And then from there, move even higher than that. So that's how I would do it. Just watch for the direction change and make sure there's a candle here that's above the prior ones that can completely engulf it. Sometimes it's not one candle. Sometimes it takes 2. In this case, it took 2. Actually even 3. So you got 3 candles that are engulfing the big ass one from before then, right? And you just kept going higher and higher and higher. And whenever I see these big fat candles, like this is institutions, this is not retail. Retail are like these small candles up here. This is all retail. So that's how I would do it. Hog. Just wait for confirmation. Any other questions I can answer? Yes, slowly. You're asking a very good question at compression candles. All right. I think different people might have... Oh, can you hear me now? I think you can hear me, right? Okay, different people might have different opinions of what a compression candle is. I have a very strong opinion on this that it's loosely held. I think that's the best way to describe this. My opinion on this might change if I learn more. So far, I have not learned more because I'm very limited in my knowledge here. I've only been trading since February, if you can't tell, but I'm very new to this in general. But the way that I understand compression candles is where a market maker or sometimes multiple market makers are setting up their positions, right? And so what happens in between these like large impulse moves is you'll get a small candle, something like this, like a large wick and a small body. To me, this is a clear sign that this is a compression candle where a market maker has set up a position, right? And because it's been retraced, at least to, the way that I play with this, like at least the way that this has retraced 50%, this is an opportunity that I see like, hey, if we close above this level, the market makers have already positioned themselves in this candle and we're going to go higher than this, right? If it's a bearish candle where like 50% retracement down happens and you get like a body like this, like we're going to go down even further before we end up going higher than that, right? And so like I'm looking at 15 minutes for that compression candle. So you got one here, you potentially got one here. And then this is where price just slows down, right? You get like these moments of breadth in between multiple high moves or multiple down moves where you get a compression candle like this. That's a market maker setting their position, right? And so that's what I look for. Like that to me is a clear signal that there is someone setting a position to go either higher or lower. And depending on where that candle sits and the trend of that candle, I can either take a call or a short. I try to be ahead of that game. Like I try to make sure that whenever this compression candle happens, I already have a position set up, whether that's to the upside or downside, because I don't know, once you understand, at least for me, like once I understood liquidity and how that works, it was pretty easy to see the moves. And then how do I strategize longer swing trades? Honestly, it depends. Like when I swung that 670C from Friday, that's because I had no confidence that we were going to hit that level, to be honest. I didn't think we were going to do it on Friday. I sure as hell didn't think we were going to open at 677 today. But to me, I was like, look, there's a lot of liquidity that's being swept from the last couple of days. Like, yeah, we're going to go higher. I just don't know when. And so I just gave it more time, frankly. And like, I didn't know if we were going to get to 670 that one day. And we ended up getting there by the end of the day, but I was not expecting that. And if I don't have confidence in something, I'm going to roll it. And 100% of the cases, I'm going to roll it to like a day out or maybe even a week out, right? And I think I said this on Monday. I was like, look, I'm going to take 680 calls for the end of the week because I think we're going to hit that, by midweek. We ended up hitting that yesterday. I was not expecting that. So I had no confidence in that trade, but I ended up swinging that for the end of the week because it ultimately was the right call, I think. How much time do I spend working every day? Ooh, I don't know, not a lot. This is my full-time job now. That's why I'm so active, usually in the chat. But I don't know, this took me months to figure out how to do full-time, and it worked out, but I would not recommend this for everyone, to be honest. Like, it's hard as shit sometimes, and I've seen my portfolio get nuked, at least in the last week, by like 10-20%, and like I can withstand a drop, no problem. But then coming to the table every day with like this chart open and trying to figure out what the fuck's gonna happen, like that shit is hard. I would not wish that on my worst enemy. The only thing that, at least to me, has made me successful is understanding where liquidity is, and understanding that if I go from this zone and we close above this, we're going to the next zone, like that's the most likely scenario that's going to happen, then great. Like that's worked for me, but I don't know, it's not for everyone. It took me since July to figure out how to do this full time, and then I ended up giving myself like, if I can make enough money that I would on my day job in this month and the next month and the month after that, then I'm happy to step away from that role and do this full time. So fortunate to be here, but yeah, it's not for everyone. I got 10 minutes before I got to drop. Any other questions I can answer? $6,900 for Monday. Honestly, I've had a 7,000. I think TT actually started this, but I've had a 7,000 position for SPX for January 16th, I believe, for like 6 months now. I think we got them back here in September or August or something like that. I can't remember, but that was at the time felt expensive. They're obviously up quite a bit from when I bought them, but I've had them for a while. I do think that we are going to all-time highs, if not by the end of this week, then definitely by Monday. But I would not do 7,000. I would probably do something like 6,960 or 6,900 at most. Just because I'm afraid of where we're, like, if we reject here, like you're going to come back down to like that 68.29 area. If we reject there, you're going to come back down, right? And the lowest time frame I use here is like 15 minutes. Like I rarely use 5 minutes, to be honest. Like there's just not enough context here. And like the candles are relatively thin. The 15 minutes, at least for me, is the best bang for my buck. But yeah, as I said on Monday, like get the calls for the end of the week, maybe on Monday for 680 or 6900, and hedge them with a put, right, for Friday. Just because I don't know what's going to happen. No one knows what's going to happen except for maybe Trump, but I would always hedge, especially at like large-ish portfolio sizes, I would always hedge with the opposite direction for a shorter time frame, just in case something goes wrong, right? And honestly, like the only thing that saved my portfolio last week from a total meltdown when we started going from like the 686 range to like 662, I had gold calls and I had a VIX hedge for a call as well, just in case, right? And at least to me, when you're trading a portfolio above $10,000 in size, like you should definitely have hedges. Even if they're like 1 or 2 contracts, you should definitely have hedges because they're super helpful in preventing a total collapse. Because every growth stock in the world, like I can look at Palantir, P&G, for example, look at this random robotics company, ended up nuking from their all-time highs in the last week, right? So I wanted to preserve whatever capital I could, and luckily I had gold calls and some futures that I'm working on. But I don't know. Once you understand liquidity, it's pretty easy to see where it's going to go. And like this is something that I charted for gold futures, and like it works the exact same way. How do I handle all-time high scenarios? That's a good question. It's impossible. So when we ended up going to all-time highs back, when was it, like end of October? I think it was like around here. Like we didn't have any signal. Like we didn't know where to go, right? In that case, I would just wait for orb. So like get the first 15-minute candle and just better understand, are we closing above that or below that? And if you're closing above this candle, I'll mark this out. This is your orb on the daily or on the 15-minute time frame. And let's call this 15-minute orb, right? If it's all-time highs or you have no frame of reference, like I would just use orb as a way to do this. Fibs, you can use them. I don't use them. I don't understand them either. They scare me. So to me, like if you're closing above this or you're wicking into the middle, then you can kind of go higher. If you're closing below orb, you're going to take puts all day and short every pop. That's just how I would trade it at all-time highs. And that's how I did it, frankly, at all-time highs. Because I had no point of reference for what the next zone would be, right? So I was just looking at the 15-minute orb, and then from there, are we closing below that? Great, take shorts. Are we closing above it? Great, take calls. And that's exactly what ended up happening. So that's another tool in your toolkit, I guess. Just use orbs as a simpler trading strategy. And for the end of the week, let me just give you some scenarios so you can chart them yourself and see where we end up going. If we're closing above this and we're not sweeping these lows. Oh, one thing I want to say, I want to see a sweep of 676 today. We never got it. I think it's still in the cards. I don't know when we're going to get it, but I do think they want to sweep this liquidity before they're going higher. So I want to see a scenario like this tomorrow where we're closing above this. We maybe sweep 668. I don't know if that's actually going to happen, but maybe like at like 685 or 686, maybe there's a level. Let me just see. Oh yeah, there's a level that I forgot to mark. And there's also another level here. Okay. Anyways, what I want to see tomorrow is like a rate on liquidity, either above or below, and then take the opposite direction for the reversal. So if we're up here, we're closing above here, we're sweeping, but we're not really closing, then I want to see it come back down and test these levels before going back up, right? So that's one option. Another option is we might actually end up opening lower. So like you might have a gap down and they sweep liquidity below this before going higher. So that's another scenario, but like mark it out in your chart and better understand where that liquidity is, because I think it could go any different way. We're not out of the woodworks yet where I would be hesitant on doing anything else. Like we're not, I don't know. I think we still have a chance to go make it all-time highs. I think it's more than likely that that's going to happen, but I'm cognizant that if we reject here, it's going to come back down. So just be mindful. I wouldn't full port anything just yet, but I don't know. I'm still pretty bullish. I think I'll die the last bull in the Owl's voice chat because everyone else is too quick. Yeah, I need one more line. I'll see exactly. Everyone is too quick to buy puts or swing them. I don't like that. Until the trend changes to the downside, there's no point. Oh yeah, welcome back. And that's it. That's a quick lesson in liquidity and how I trade the reversals, or what I see at least. And there's no indicators. You can do this without having any indicators. You can do this on your own very quickly, and like it'll take you, I don't know, 5 minutes to find these levels and mark them on your chart. We can go through them again one last time. Price got a reaction here, got a reaction here, got a reaction here, got a reaction here, got a reaction here. And they don't have to be perfect. They just have to be like roughly, somewhat sane. And then you can mark out just the different layers of liquidity that might exist. And that's it. Price just goes from, at least for me, you can correct me if I'm wrong. Someone smarter than me, tell me if I'm wrong. To me, in my experience trading since February, price literally just goes between one level to the other. That's it. There's nothing in between. I saw this clearly on QQQ for the first time ever because I don't really trade QQQ until last week. I'm like, look, there's nothing in between 620 to 600. And that's exactly what we ended up getting, right? So I don't know. Hopefully this is helpful. If not, tell me. If you have other feedback or other requests, let me know. And I will see you all later. I'll also put this on my YouTube after once I figure out how to edit this and put it on there. But I'll share the recording afterwards. Thanks all, and have a good night.